Hey guys, welcome back to the channel. Hope you were well. Market bounce. I'm not sure if we saw a full bounce today, but it certainly wasn't a bloodbath. It was a lot better performance than I think many of us on this channel expected, myself included. I mentioned on my videos over the weekend that I had concern we would have a lot of volatility this week, particularly on Monday. I thought we would have a gap down, which we did to start the market, but we had an amazing recovery. In fact, the S&P 500 had a V-shaped recovery in the second half of the day, and it finished positive overall. Today wasn't a bloodbath at all. Despite all of the news that continued to hit the wires on Operation Epic Fury, despite the 10% spike in oil we saw in the pre-market heading into today's action, a sea of red in many of the stocks that we follow on this channel. Analysts were telling us all to run for the exits. But what did we see at the closing bell of the end of the today? It wasn't a bloodbath. The market didn't crash today. What we did see today was a controlled demolition of weak hands executed by institutions that were relying on the panic in the retail investors to fill their positions even more with these stocks. So today we're going to talk about three things. We're going to take a look about what the expectations were and what really happened today in the market. We're going to look at Nvidia and talk about the shopping spree they went on today, which was very counterintuitive to probably what many of us expected to see today. A massive move for them, a massive investment in two companies they feel are strategically important. And then finally, we'll take a look at Micron. I'll talk about what I saw and what I'm framing as a master class in the candlestick patterns throughout the day. What exactly happened with that stock today? How did it open? What were the support and resistance levels we saw throughout the day? How did it close, and what we expect with the stock tomorrow? Those are what we're going to cover over on this video today. If you haven't done it already, hit like, hit subscribe to the channel. I appreciate you guys spending time. Let's jump in and dive into what we saw versus what we expected. We know there was a huge divergence between what was supposed to happen today and what actually happened today. And it was a huge lesson for me, at least, probably many for you on the channel as well. The fear trade today was supposed to ignite the market like a match at a gas station. We were supposed to see red across the board overall. We did see a gap down to open the market. Many of the stocks, Micron in particular, that I thought would gap down did. But we saw recovery throughout the day. We saw resilience in many of these stocks. We saw resilience in the indexes in the market overall. Gold did surge early. It looked like there would be a movement for this safe play, the classic flight to safety that we saw, but it pulled back. And that's a critical lesson for us throughout in today's action. It showed us that big money is still prioritizing growth over blind panic. They were not running for the safe bunkers today. They were rotating to different positions in different sectors in the market that are poised to grow right now. We also saw oil spike today. I told you last night to watch the WTI index. Watch to see if we get over 75 on that. Are we going to start to push towards $100 a barrel in crude oil? And it was moving that way, but then it stalled. And I think it stalled because the market this morning around 10 a.m. figured out the math. They figured that the Strait of Hormuz was congested. It was contested, but it wasn't closed. And there's a massive difference between a global economic crisis and a localized geopolitical conflict. The market figured that out, and it also caused relief. Now, I will say I saw a news report that came through maybe just a little while ago that said that the strait is closed now, and we could expect higher oil prices. That may have an impact on tomorrow as well. But for today, it didn't. We'll have to keep our eye on it and see if it has an impact in tomorrow's market overall. That's what we expected to see. What we didn't see, the fear index, I also will say, did get up over 20, as I was mentioning, as a clear sign that there's fear in the market, anxiety in the market. It could have an impact. It was over 20, but it didn't seem to have an impact. So we'll keep our eye on that index tomorrow as well and see if it changes the sentiment to the market. But today's market wasn't a bloodbath. It was a positive response. It was a great thing to see for many of us investors. We'll keep our fingers crossed that it's the sentiment we will continue to see, the action we will continue to see moving forward. But let's jump over and just take a look at what we saw today. I'm going to pull up the tech sector, as you can see on your screen, looking at Yahoo Finance. Tech sector on the bottom right here, you can see was up over 1% today. amazing growth. It's not what I expected. I expected to see volatility there. I expect to see a red day. So really nice surprise. Nice to be up over 1%. I'm sure many in the channel are happy to see that response as well. And the S&P 500 was up in the green, 0.04 growth on the day. Nice to see that as well. But let's jump down and take a look at the top sectors. I want to call out three because it's going to focus on my next story. One is the semiconductor space you can see here, which has the largest weight. Semiconductors were up over 1.5% today, the semiconductor industry. I also want to focus on communication equipment was the biggest grower in this sector today. Communication equipment was up 2.5% today. It's been up over 18% of the year. And then finally, I'm going to draw down to scientific and technical instruments, which was up just about 3.5% today. So let's dive in and see who the winners were in each of those. They're all related to Nvidia and the two companies that they strategically invested in. But Nvidia is up almost 3% today. Micron up 0.07. They were the outlier in the memory sector. They were the only one up of the four key memory stocks. But Nvidia up 3%. Really strong validation of their earning print last week. Strong validation. They were actually picked as number one stock now. They displaced Micron. Morgan Stanley picked them as their number one stock. And they made a key investment, a $4 billion investment today, which is a very bold investment, but it also lines up two critical companies for them as they build out their AI space. They build out their ability to move data between their GPUs. And then who those companies are, we'll jump over to communication equipment. One of them right there is LITE's, the tickers. So Lumentum Holdings, up almost 12% today, up over 112% on the year. And then the second company right here, you can see in scientific and technical instruments, up over almost 15.5% today. So Coherent, up 62% on the year. Let's jump over and see what they did. So you can clearly see on your screen that Nvidia invested $2 billion in both of these companies today. It was announced. What impact did it have on the companies? Coherent was up. Let me get out of the Coherent was up almost $40 today, 15.5%. I gave a little back in the after hours, so it came back by about almost $3, still at $2.96. Really nice growth. Held on to that. We'll see how they open up tomorrow. And then Lumentum Holdings up $82 on the day, 12%. Pretty high price per share there at $7.83. They also came back a bit in the after hours. So we'll see how both of these stocks perform tomorrow. But you may ask, you may not be familiar with these stocks. You may ask, what do they do? Why did Nvidia invest in them? Why do they feel they're so critically important? I know some of you on the channel love these stocks because you've been asking me to invest, to profile them and make a video on them. So maybe drop a comment and tell the rest of us why you love it. What do you love about it specifically? But we know the reason Nvidia is investing in them is they have said for a while, Nvidia, that what they're calling is this gigawatt scale AI. They're gigawatt scale AI factories. The bottleneck in those is shifting. It's no longer just about the GPUs. It's about the nervous system now. We saw their revenue on their networking part of the data centers and their earnings print last week was $11 billion, up 3.5 times over the prior quarter. It's a significant growth engine for Nvidia moving forward. This is going to help them in that nervous system play and that networking play overall for their data centers. So it is the ability to create these physical connections that allow data to move between their GPUs at the speed that is required. And the nervous system in today's world, at least according to Nvidia, is going to be made of light, of optical fiber, silicon photonics. So Lumentum and Coherent are two of the only companies on Earth with the technology and the manufacturing capacity to build the optical interconnects that next generation AI clusters require. So with Nvidia pouring $4 billion into the US-based fabs for these two companies, they're not just making an investment. What they're stating is they are vertically integrating the speed of light into their supply chain. These companies are no longer just suppliers anymore. They are protected assets now within the Nvidia ecosystem. They are required companies, strategically important companies for them. This is going to boost these companies' stocks moving forward. It probably will boost valuations overall, and it's going to push the stock price targets for them. So great move for Nvidia, locking up strategic companies, partnering with that they feel they will need moving forward. They're very bullish on optical fiber as the way to move forward, is to move data between the GPUs at the speed that is required overall. So that's a big piece for today's market. And now I want to jump over and just take a look at Micron. How did it perform today overall? The resilience it showed was very impressive. So let's jump over and take a look at their candlestick pattern. I'll come back, and you can see on the screen, every one of these candles represents a 5-minute window throughout the day. So you can see right to start this large kind of green candle, just as we expected. So Micron did have a washout, an opening washout. They actually gapped down pretty significantly right at the opening bell. They stock shot to 401 right from the get-go within minutes, seconds of it opening. And it actually shot a little further. It's hard to see it, but there's a wick that goes down into the volume bar below. So that wick actually shows the full low for that 5-minute window. And the stock actually hit 397 in this 5-minute window. And take a look at all the volume that occurred within the first 30 minutes, I would say, even the first 20 minutes of the trading. So we did see significant buyback, and that's that big volume bar that's kind of hard to see. Let me see if I can pull this up away from it a little bit. There, makes it easier. That big volume bar there shows just the sentiment and the bulls stepping back up and buying that stock back up at that 397 and pushing it back up. And you can see after that, we actually had a bit of this V recovery in the next few minutes. You can see the V where it kind of dropped down again, had a bit more sell-off. You can see the volume below. Actually, you can see the RSI below kind of spike down to the point where it's being oversold, almost hitting that 30 down there below, rallying back up to a 50 level, and it kind of stayed in that neutral category of 50, 60 throughout the rest of the day. But we saw these incremental steps. You can see it kind of move up, this V recovery after it hit that bottom. Nice bullish response, kind of recovered back up for the stock. And then we saw this afternoon consolidation, and you can see it on the screen there, really for the rest of the day from about 1 o'clock to 4. The stock tried to push through kind of test that 417 level multiple times and got pushed back. We do see a double tap pattern that happened in that time frame as well. But we saw just this tightening range overall, this flat top consolidation that you saw in the stock in the afternoon session. And it's technically a bullish signal overall. It suggests the stock is digesting its gains rather than giving them back. The RSI finished at 51 on the day, which is neutral. So it's a great sign for us Micron investors that the stock is not overbought. It has reset its energy, and it has a potential to break out tomorrow, something for us to keep our eye on overall. But I would say from kind of my sentiment overall and what I saw for Micron as it closed out the day, so it closed at 412.67. It did give a little back in the after hours. The last time I saw it, it was at 410, almost 411 a share. So it was giving us a little cooling off signal in the after hours. We'll see how it responds tomorrow. But the play for tomorrow for me at a 51 for RSI, that's a perfectly neutral setting. So it's a signal that the stock is not, it's not overbought, it's not oversold. It's kind of hanging right in that perfect neutral area. We're going to watch the tape for me. I'm going to watch for that 405. That's the pivot point overall tomorrow for me. The bulls, if we can stay above that, it's clear the bulls own the tape, or they own the trade right now for Micron. And if we can break 420 or push through that 417 resistance, the upper resistance that we fought today and got pushed back down, the stock could look for a very positive move. We could see a shift towards 425, 430, which would be a great signal. Now, this is dependent that we don't have any news that comes out overnight that causes more uncertainty in the market. But if we see a candle that pushes beyond that 397 and we don't see immediate support come back in, this could be a clear technical shift with the stock. It could show us that the party may be over and we may not be able to reach that 425. But based on what we saw in that 5-minute chart that I showed you, it is tomorrow probably very easy expectation to say that we're going to see continued consolidation. with a bit of a slight bullish bias, I would say. That, the 400 level was the clear floor. When we got down below 400, the bulls stepped back in. They pushed that stock back up. That's a good sign for Micron. I would expect we could see a choppy morning like we saw today based on what we're seeing in the after hours as the market digests that after hour price of 410 that we were looking at right now. But the fundamental news and some of the news that came out of India with the opening of the mega fab out there, we did hear their CFO come out again and confirm they're sold out, giving them pricing power. So that's all positive sentiment for the stock. If you ask me the final verdict, I would say if someone was asked, is the volatility over? Are we going to have a market bounce? My clear answer, what I feel right now is no, depending, I would think. And I need to be direct with you guys. I don't think it is completely over the volatility for the week because we are in such a headline-driven market. As I mentioned to you, I saw the news of the Strait of Hormuz. Hormuz was closed now. That's going to cause more uncertainty in the market. If we see any type of retaliation or moves by Iran, it's going to cause more uncertainty in the market. So I think the market today chose to believe that Operation Epic Fury is contained, a localized conflict, not a global crisis. And that interpretation overall drove recovery in the market. But if that interpretation changes, if we get new reports or new news that makes us relook at the situation, and it could be related to the Strait of Hormuz, like I said, it could be related to a retaliatory strike. Every green candle that we saw today, if that uncertainty changes, if the sentiment in the market changes, every green candle could evaporate overnight. That's the risk that we're carrying in tomorrow's session. That's the risk we have right now with everything that is happening, the global political crisis that is happening, Operation Epic Fury that is happening right now, and how sensitive the markets could be. So let's continue to stay disciplined tomorrow. My advice around ignore the noise doesn't change. The market is full of noise right now. You know that. And the person who can sit that aside, trust their fundamentals, look at the market data, that's the person that'll win in today's market. It's not the loudest voice in the room. It's not the person that has the most panicked tweet, publishes the most panicked tweet, or is sharing the most panicked tweet with you. It's the ones that rely on the data and can separate the noise from the signal. If you held the market dip today, you were right. Trust your gut, trust your instinct. Let's be right again tomorrow. Hope you guys have a great day.